How's it going, everyone? It's Sam. I am making a video on USO oil fund. So if you don't know what they are, they're the United States Oil Fund, and they track the price of oil in the United States. So a lot of people have been requesting this, and I want to come with a short video because something has actually changed pretty drastically here, and I think it's going to have big ripple effects. So this has not gotten as much media attention as I would have thought, but I'm going to go through what's happened with USO, why it might be worth a lot less going forward, and why you may or may not want to get out of the stock right now because of what's happened. So before we go any further, please like the video and subscribe. I make videos like this all the time, so if you like this, it's definitely worth subscribing because I'm going to make more of them. And also down below is the link to Webull. So if you open up that investment account with $100, you can get 2 free stocks. So I get some stocks too for that, so it's a way to help out the channel. But let's get right into the video here. So USO is the United States Oil Fund. If you don't know, several weeks ago, oil prices went negative. And this is the first time that we had seen this in a long time, and they went pretty significantly negative. And a lot of people were confused with what was happening. And what was occurring was these oil futures, so the right to buy oil in the future, were coming due and no one wanted to buy them. So these people were going to have to actually take physical delivery of this oil, and people don't have storage for it. People don't want to pay for shipping and storage, so they were trying to sell so bad they were selling at a negative. So that's when people were joking about buying negative oil and all that kind of stuff. But since then, you can see here on the chart, oil used to be $105 plus just at the beginning of the year, and it dipped down all the way till $16.88. Since then, it's actually up 50%, so it doesn't look like it's up very significantly on this chart, but you can see here it's actually up 50%. It's done quite well, and even now, if you were to invest and it just went back to $100, you would double up your money twice. So if you put in $1,000 and it went back to $100, you would end up with $4,000. So I'm not saying that that's where it's going, but there's still a lot of opportunity here because the oil price is still low. So part of this is just due to the fact that there has been such a high production in oil between Russia and Saudi Arabia, going back and forth, trying to outproduce each other and kind of getting in an oil war. The other thing is a lot of markets are closed right now, a lot of economies are closed, so there isn't as much demand for this oil. That's why stocks like NAT and DHT and other oil tanker stocks have done quite well because they need to store the oil somewhere. However, as you can see here, the price has been up this year. So another reason that USO increased in value was because of their changing contracts. So they used to invest in very near-term contracts, and they were very heavily weighted in this. However, a few months ago, or just about a month ago, they changed into longer term contracts. So they had some that were, in the first few months, they had some that were about 6 months away, then a year. So the risk was really spread out over the future as opposed to kind of make or break. If the oil price goes up in the next month or two, then you're going to do quite well. If it goes negative or even further down, then you're really crap out of luck. So they spread out the term, which really reduced the volatility in this oil fund. But something's changed recently, and that is that the broker for the ETF actually has limited their ability to buy contracts in oil. So a widely popular oil ETF has been cut off by its broker from buying futures, limiting its ability to meet its investment objectives. So as you can see here, the person's quite surprised. So USO, an oil exchange traded fund that's widely popular with traders, has been cut off from buying future contracts after a surge in volatility saw oil prices turn negative last month. So their broker, RBC Capital, has informed USO that they may no longer hold positions in or buy oil future contracts until further notice. So this was according to an SEC filing made by the ETF. So this is quite big news. We don't know the extent of this. This other article says that they're going to hold on to larger amounts of treasuries and cash, but that's not what this ETF is for, right? So this ETF is for the sole purpose of investing in oil futures. So if you think the price is going to go up in the future, you invest in it, and then the futures go up, then you make money. Now they're saying now that they have to hold on to cash and treasuries. So they're essentially going all cash until they can start buying again. And I think part of this is because of what's happening in the economy right now, that they can't have oil prices go negative when everything's going on with the virus. We don't know when this is going to change. So this is quite momentous. This is like Apple saying we'll no longer be making technology products for the foreseeable future. We're just going to divest everything and just wait. It's not exactly the same thing, but you get my point here. If your sole purpose is to invest in one commodity or one technology, then you just say we're not going to do it for the foreseeable future, that's very upsetting to a lot of investors that have been investing in this for that sole purpose. Now, I'm not sure exactly if people haven't really heard about this. This just happened Friday that we heard about it, and news stories started to break, and it was a long weekend. But the stock isn't down very much today, so it's only down 1%. Now the general market is up on the day so far, but I think that a lot of people will get out of this fund once they see that, because oil prices could go up over the next few months and they're not going to be invested in it. So you could buy now for $25.40, the market or the contracts double in value, and you weren't able to take advantage of any of that. And I think that that's going to cause a lot of people not to want to invest in them. Now, it will be interesting to see where people invest instead. Do they invest in the individual oil companies instead of the oil fund? So invest in some of the big players in oil. That's one option that you have. Otherwise, you can stick it out and hold out for USO to start being able to buy oil contracts again. I'd be interested in hearing what you guys think. Who is going to benefit from USO not being able to buy these contracts? Obviously, people that want to invest in oil are still going to invest. They're just going to find a different place to invest. So let me know in the comments below, who do you think is going to take advantage of this? How do you think it's going to shake out? I will do update videos if there's any more news on this, but for now, this seems like it's pretty much everything. USO was something that was a really good investment opportunity. Now it's kind of dwindling because you're not investing in what you wanted to invest in. I appreciate you guys watching this. If you guys have any questions or comments on this, leave them in the comments below. Again, please like the video and subscribe because, like I said, I'm going to be making more videos like this. Let me know what you guys think, and again, if you haven't checked out Webull, check that out below. I've had a couple referrals recently. It takes about a week to get the stocks after you invest and make the deposit, but you don't even have to invest the money in anything, I don't think. I think you can just put money in as cash and then collect your 2 free stocks and sell them and then take it back out. So it's definitely an easy way to make a few bucks, and it really does help me out and helps out the channel. So I appreciate it, guys. Thanks for watching the video, and I will see you in the next one. Bye.